All right, Backbase is privately funded fintech company founded in 2003 in Amsterdam. Backbase created the category-leading engagement banking platform EBP that helps bank and credit unions to power the full customer's life cycle through a single white-label platform, replacing their limiting standalone point solutions. Most Malaysian banks have been making their move to accelerate their digital transformation efforts. However, what they didn't realize is just how much work it takes to actually make the shift successfully. Aside from the challenges of the intricate tasks of maintaining its existing legacy system, potential disruptions and operational risks, the dilemma to buy or build holds significant implications for their long-term success and competitiveness. In collaboration with IDC, Backbase announced their release of the APAC-focused IDC Infobrief titled Accelerating Customer-Centric Transformation by Balancing Build and Buy, a collaborative approach towards sustainable digital banking architecture. The report expounded further on the local and regional perspective of digital banking transformation in driving an accelerated and differentiated digital customer engagement. And ready to discuss further is Riddhi Dutta, Regional Vice President, Asia Backbase, the global pioneer of engagement banking. Ready on the line. Fantastic to have you. Thank you, Riddhi. How are you?
I'm good, Nina. Thanks for having me.
All right, from the intro I've just mentioned, probably you can share with us what are the challenges that CIOs are not seeing when building their in-house digital banking solutions.
Perfect. So I think when we picked up what were the three top sentiments that Malaysian CIOs were facing when it comes to digital experience and digital platforms, there were three things that they were plaguing with: a lot of legacy infrastructure, system downtimes, and operational risk. Now, if you tie them back towards what they have been doing, where they have been trying to build everything in-house, some of the things that they are not able to predict are challenges around how will they take care of system uptimes, how will they take care of maintenance, more importantly, how will they take care of hiring people, cross-skilling people, retaining those people, because it's a very competitive market out there, right? And the most important thing that CIOs are not able to see when they are probably embarking on such transformations is that what should they be building? Should they be building something which is hygiene and it's a given, industrialized, or should they be building things which are more differentiated for the bank? So I think building is not bad. We also propagate that banks should be building, but the point here is what should they be building and what should they not be building? And that's what we are trying to address through the info brief along with IDC.
Then how is this collaborative approach, adopt and app build, going to help banks in the long run?
Very good question. I think if you look at any technology, any platform, banks want two things. If you talk to a CXO, if you talk to a CIO, they want quick time to market, they want speed. And when we talk to so many executives in banks, they're all asking for how soon can this happen, right? So they want speed. At the second time, when you talk to technology and even within business, they want control, they want freedom, and they want flexibility. They don't want to get locked in with a particular vendor. Now, this collaborative approach of adopt and build gives the best of both worlds to any particular bank, to any particular exec. It gives you adopt, which means speed, quick time to market. At the same time, build gives you that flexibility, the control, the freedom that a CTO would be looking forward. And we have seen this when we've seen that when banks are working on platforms that give you an adopt and build approach, they have seen 40 to 60% quicker time to market. They have seen reduction in building cost by 2 to 3 times. Now, these are huge metrics that are coming in front of us, and it's there for CIOs to see and CDOs to see that it makes more sense to do an adopt and build, invest in platforms, rather than build everything grounds up.
Are there any reasons as to why some of the incumbent banks are still not adopting this approach?
I think the main reason is the fear of not having control and freedom. If you just go back 5 years into the history, why did banks try to start building? Because 10 years back, when banks were using plug and play out of the box solutions, they realized that these solutions were very restrictive. They did not allow the bank to take control. And for every single thing, a bank would have to go back to the particular partner to get things done. Now, that's something in today's day and age when you really need to respond to the needs of the customer very, very quickly. You cannot rely on a partner. You cannot rely on a vendor to come in and do things. You have to take control. I think that mindset is still there. That fear is still there in CIOs and CTOs, that what if I go for a platform and I still go in and get locked in with a vendor. And I think that's the biggest fear. The second fear is, and again, it's not completely founded, that CIOs and CTOs feel that if they stop building, their overall equation in the bank goes down, which is wrong, because the more you invest in platforms, the CIO or CTO could start focusing and building things which are truly differentiated for the bank and not, as I said, build platform and hygiene stuffs.
We can see there's a deficit trust in there. But with this collaborative approach, does it take away all the challenges in building a successful digital banking transformation?
I wouldn't say it would take away all the challenges. There still would be challenges, right? But the tune of the challenges definitely would go down. If you look at it, again, real life examples, banks have taken 18 to 24 months to get one journey out of the way when they were trying to get things done in-house, built. When they moved towards platforms, they were able to launch a minimum viable product in anywhere between 6 to 8 months. So, the biggest thing here is banks get to see an application which is working, banks get to see speed, banks get a quick time to market, and then you iterate and innovate on top of it as you go along. So it wouldn't take away all the challenges. There would be minor challenges here and there, but the larger challenges of speed, control, and freedom would definitely be taken away in this sort of an approach.
All right, Riddhi, you just share with us some of the more insights. How can we understand this? But maybe you could add a few. What is the Backbase role in this, in helping banks for a successful digital transformation? How about it, Riddhi?
Sure. So as you mentioned earlier, we are the creators of this engagement banking platform. And what also banks need to realize is that their legacy investments on things like core banking, backend systems is not going to be enough for them to meet to the constantly changing demands of its customers. And that's where we have this concept of where we're talking about hollowing out the core or abstracting the core and moving more and more processing, more and more engagement to layers outside the core. And that's where Backbase comes in. Today, we work with banks where we are helping them orchestrate the customer journeys across life cycle, whether it's onboarding a customer, selling lending products, servicing a customer, so on and so forth. We are orchestrating this entire customer life cycle for both customers as well as internal employees, and then more importantly, across lines of businesses. So Backbase comes across as that one single platform that cuts across silos and helps in all types of customer and employee orchestration, at the same time reducing dependency on legacy core banking and technology investments that the bank has been making over the years.
I'm talking about every customer has its own needs. Then how can banks ensure that they can customize the adopter platform effectively to meet their unique customer needs, and we can stay competitive? How, Riddhi?
Very good question. And I'll take an instance of a bank that we are working with in the region in Vietnam. It's a publicized bank, Techcom Bank. Now, Techcom Bank was able to adopt the platform. Techcom Bank was able to ensure that with the adopted platform, they got quick time to market. But more importantly, if you look at Techcom Bank as an example today, it's probably one of the most leading digital banks, not just in Vietnam, but across the region. And the experience that Techcom Bank has for its customers is very unique. It's very differentiated. It's not like any other bank in Vietnam or for that matter in Asia. Now, this was possible because Techcom Bank was able to customize, able to extend, and able to make that experience differentiated on top of an industrialized platform like Backbase. Now, this is the beauty of Backbase. Today, we are working with, if you take an instance, we're working with 5 banks in Philippines. None of these banks have their experience similar because they have been able to customize the custom journeys. They have been able to customize all their offerings that they're giving to customers and employees. As long as banks are going in with that mindset of differentiating where it matters and not reinventing the wheel and really focusing their build and their technology investments on that differentiation, platforms like Backbase will come in, give a huge boost, huge acceleration, while banks can really focus on the differentiation as you spoke about.
All right, maybe my last question, talking about trust deficiency, gaining trust. How can banking platforms should address financial inclusion in Malaysia? Talking about this is a collaborative approach to maintain in the future.
Absolutely. The reason why people are not coming into the banking ecosystem is because at times it's too cumbersome. At times it's a lot of paperwork and people don't really want to go for it. Think of a world where you don't, or I wouldn't say no paper, but less paper. Think of a world where there is less friction when an SME wants to onboard themselves to a banking ecosystem, when a small business owner wants to pay salaries to its employees, right? Think of a world where everything is possible digitally with less friction, with lesser human interaction, and a lot of self-service. That is the clue towards financial inclusion. The more you make banking easier for your customers, the more you'll be able to onboard more and more people into the banking ecosystem. And for us, the answer towards that is banks investing in engagement banking platforms, which will help you do that digital customer orchestration. So banking platforms play a huge role. We have seen that across the world. We have seen that in Asia as well. And I'm pretty sure with the new digital banking the new digital banks that are going to come in Malaysia, as well as the incumbent banks waking up and seeing that this really proves, or this really gives them a sort of a challenge in terms of how do they expand their net. I think investment in banking platforms would definitely go a long way in addressing financial inclusion in Malaysia.
As you can see, the digital world is getting complex and even collaborative approach. We don't want to add more trouble, but we want to make sure that this industry maintain even the sustainable in the digital banking. Definitely also need thank you very much to Riddhi Dutta, the Regional Vice President Asia of Backbase, the global pioneer of engagement banking, and everything will be uploaded in astroawani.com and all platform digital Astro Awani.